So accounting rules and their effects already we have come across. So just to make a refresh again, we are looking back again. So this one. So actually we have the three types of accounts. So personal account, real account, and the nominal account. So these are the rules for that. Personal account, debit the receiver, credit the giver. So generally personal accounts who are people included is the individual persons whom I am having dealing with. If I am doing a business X limited, if I am having a dealing with Y limited or Z limited, individual person and artificial persons like usually capital account and drawings account will be considered as the personal account. So you have to remember this rule: debit the receiver, credit the giver. You have to memorize this one. And real account, all the tangible and intangible items, assets will come under the real account. So generally what will be coming if you see cash? Cash is either coming into the business means debit what comes in. If that same cash is going out of the business means you have to credit that credit what goes out. Okay. Similarly, plant and machinery, land and building, furniture, everything. Okay. So you must be logically thinking whether that transaction, there will be lot of transactions given to you and you have to pass journal entries for that. So that is the first step in our accounting cycle, which we are going to do with. So if you see, you have to think logically. If I am going to purchase, what is coming into and what is going out of business. So from that angle only you have to think apart. And similarly, if I am going to sell, what is coming into the business and what is going out of the business. So that you have to think it out, and accordingly you have to debit or credit. So cash, plant and machinery, land and building, furniture, all the tangible assets will come under the real account. So real account rule is debit what comes in, credit what goes out. So if I am selling means you have to credit the cash. Sorry, you have to debit the cash. So if I am selling a furniture, so what is going out? Furniture is going out and cash is coming into. So cash, then that situation I will be debiting, cash account debitor. And the furniture is going out. So furniture I have to credit. Okay, so debit means what comes in, credit what goes out. You have to think it over and accordingly you have to post the entries. If I am purchasing plant and machinery is coming into my business. So plant and machinery account I have to debit. So if I am making purchase, what is going ultimately? Cash is going out of the business. So cash I have to credit. So similarly, purchase I'm making or sales I'm making. So cash is coming in or cash is going out. Okay, that you have to think it over. And nominal account. So nominal account, generally all the expenses and losses, incomes and gains you will be considering here. And rule is that debit all expenses and losses, credit all incomes and gains. So generally what are the items nominal account we will considering is salary that you pay to your employee, wages you pay to your labor, electricity bill for power, fuel, whatever you are making payments. And then if you are going to receive interest or discount or commission, or if you are going to pay interest, discount or commission, whatever might be, either you are going to pay or going to receive, whatever in this nature, if our items are appearing, then that will be coming under your nominal account. And if you are going to expend, if it is considered as an expense, salary is paid will be your transaction, then it is an expense. Okay, so what you must do, no, salary account you have to debit that time. Okay, because debit all expenses, no, salary is paid means it is an expense for the business. So salary account you have to debit. And if you are going to receive some commission or discount, then it is considered as an income. Then what you have to do? Commission you have to credit that time, or discount you have to credit that time. Okay, to commission received or to discount received account, like that you will be making entries. So you have to think it over under which type of one particular day transaction will be given to you, which type of account it is coming under, that you have to think over first of all, either personal or real or nominal. under which account it comes actually. First, you have to think over in that way. And next, what you are going to do, what rule has to be applied. Either it is personal account means what is the rule for that, real account means what is the rule, and nominal account what is the rule. That you must be kept in fingertips. You must memorize that. And one particular item will fall under which account. That you must know clearly. Then only you can post whatever the transactions given to you, you can uh, pass your journal entries later on, ledger, everything, trial balance, everything you can carry out only for if you are thorough with this accounting rules and how to debit or credit, that rule you must be knowing what are the types of accounts and their rules. So that's what with respect to accounting rules and their effects.